Eric Muathe, Muathe.com, with US market analysis for the weekend of July 1st and July 2nd, 2017. Let's begin with the Nasdaq Weekly here. So of course we had that 2% weekly drop, but now we come back to test two lines that I think are going to determine the next major trend. On the weekly for the Nasdaq, this line that I've been drawing. Now this line is relevant because it gave us the breakout here in 2017. The market has come back to test that line here. It held sometime in March, and now we are back to test that line. So depending on whether we can bounce back above that line for recovery, or maybe we break down below the line, which might give us a signal that the market is due to go down. So the market is going to have to decide. I think it's at a point of decision whether it's going to hold this level or whether it's going to break. And so let's bring back the line. So let's draw the line one more time. So that's a line that the market is going to determine, make or break. There's also another line connecting RSI lows on the weekly, and this is a 3-year weekly chart. So connecting these 2 points here and here, you can see that we come, and now the market is going to have to decide again whether it wants to bounce back above that line, or if the market now is going to, well, decide, you know what, I'm just going to break that line and continue the recent slide. So we're going to have to wait and see in the new week whether it's going to be support or break on the weekly chart for the Nasdaq. Now one thing I can say here is this is the current weekly closing high for the Nasdaq, and we did try to break out this week or this past week, and we were rejected. So that's a failed weekly breakout, and sometimes these weekly breakouts or failed breakouts can actually be the beginning of a move lower. Already we see this 1 week down. Now it would be similar to this period here where there was a failed breakout in late 2015. So you see we failed to break out here, tried again on this week here. Ultimately we broke below support on the base, and it is the break here that brings the market lower. So right now the market needs to hold this general lows here, this area. Otherwise, if it cracks below that, we might see another sell signal if it moves below the current levels, which would coincide with the RSI support that we just discussed. So this line would have to hold if the market is to bounce, and also the top line would also have to hold. Otherwise, if we crack below those two lines, chances are we've already seen the major highs for now. Now if we take a look at the Nasdaq Daily, we can see that the line connecting this low and this low is coming in play right now, and the market is doing its best to hold that line. So again, we need to bounce on this line if we're going to move higher. For those who are bullish, that needs to be good enough to help the market bounce. Otherwise, that well-defined line, if that line is broken, then we see a bigger correction. So again, we're going to have to wait for the market to determine whether it wants to break out or whether it wants to break below the support line, which is the RSI lows line on the daily. Now I have to add here on the Nasdaq Daily that if this line holds, looks like we are forming a well-defined double bottom support here. If this holds, that looks like good support. In other words, it would be a nice double bottom and the reason for the market to bounce from current levels. At the same time, since that line is well formed, any break there would be a sell signal in the short term. If we take a look at the hourly for the Nasdaq, we can see at the highs of the week right there, the market came back to test this break line. So the previous highs, the break there, the market came back to test that line in the week, and we hit that level and we were recoiled. At the same time, at the lows for the week, the market held this RSI lows line. So we hit that line at the lows and we seem to be bouncing. So we are stuck between the sell point and this buy point. In fact, you can actually even see a wedge forming. You got bottom side support and top side resistance. So this looks like a well-defined wedge. And this is where the market hit at the highs of Friday, or at least towards the end of Friday's session, and we pulled back into the close. So that's a well-formed wedge on the hourly. Ultimately, we're going to determine whether we break out or break down, and the market is going to have to decide for us by either breaking out of that wedge to begin a nice move higher, or might actually end up breaking below this wedge, which might be bearish. If we take a look at the monthly, yes, we had a slightly down month, but keep in mind we are continuing to hold with the RSI well above 69.1. So we know that while you are holding above 69.1 on the monthly RSI, you're going to get shallow pullbacks. And as long as this is the situation, shallow pullbacks are going to be followed by a move to either test the highs or even break above the highs. And I always give this good example because it's always there for us to understand. The Nasdaq held for 2 years above 69.1 on the monthly RSI from early 2013 to about mid 2015. And throughout this period, all you get were shallow pullbacks. So again, we continue to be in a sideways to bullish market until we come off this monthly level. After 5 straight weeks of positive closes for the Dow, we finally get a shallow pullback. For the week, the Dow was only down 0.21%, which is nothing. So this breakout here was 5 weeks to the good, 5 back-to-back gains. That's a good breakout. Also, we continue seeing the Dow holding above 69.1 on the weekly time frame. That's also a sign of strength. And if we take a look at the Dow Daily, we can see that it is doing its best to bounce back above RSI 50, which is where it's been bouncing. You can see every time we've been going below 50 and back above it with uniform action, the market tends to have a good recovery. Or even these are good examples, bouncing back above RSI 50 for these lows. You bounced back above RSI 50 here in February for the lows there. So if we can hold above RSI 50 with uniform action, that's good action. Now we can also see that the previous breakout, so there was a daily closing high somewhere right there, and the market came and tested that breakout this week by holding above that line. In fact, let's zoom into this time period over the last couple of weeks on the daily chart. And here we have 3 months of daily data, so 3 months daily, and we go back to this breakout, and the price level there is 206.29. And so you see what happened here is we break out here, and we've come all the way to test this week. We held, and we've since recovered. So this lows held. So we can see that again, if we break below these lows at some point, that might be a change in the sentiment. For now, the bulls brought the market, or the bears brought the market to test the breakout, and the bulls managed to hold this together. So that's good support. As long as this is holding, we can assume that net the market is still positive. At some point down the road, we need to watch for that potential break. Should we break below this price level? And one more time, 206.29, which goes back to this previous daily closing high from June. As long as we are holding above this price, the market should be stable. If we take a look at the Dow hourly, we can see that we can figure out the highs for the week. What the market was doing was coming back to test the recent break of the highs there. And this week we tried to move above this level, but we were rejected. At the highs of the week, we hit this level right there, and the market got recoiled. We also came close to trading above that line, and we got rejected. So this method I call the uniformity method. Check the description of the video for a link giving you more details about this method. And we can also see that towards the end of the Friday session, we had come back to test the top side of the RSI on the hourly, and we got rejected right there towards the close of Friday session. Now at the lows of the week, what the market was doing was coming back to test this short-term entry, which corresponds with this RSI movement. By the way, that happens to be, so this level here happens to be at about 38.2 on the hourly for the Dow, and at the lows of the week you see that we bounced exactly on this line right there. So you got again another chart showing us potential for nice wedge formation and eventually a resolution of the current market situation. We got lows line holding, and you got top side resistance. So at some point we are gonna break out of this wedge to continue moving higher, or we're gonna break down to start another slide. Now since we are within the wedge, we don't know which direction the market is gonna decide. So the wedge is right there for us to see. You can even draw it this way, but that wedge is eventually gonna resolve with a move higher or with a break below the lows. Take a look at the Dow 30-minute chart. We can see at the end of Friday's session, we came back to test the top side of this line, and we were rejected towards the close. So we can also conclude that as long as this line is rejecting the Dow, chances are it continues being short-term sideways to down. At some point, should it move above that line, is when we should get the idea that the market wants to move higher. So right now we are contending with resistance, so we shall assume short term until the market can clear this line. We are stuck in what looks like sideways to down on the short term chart settings. As long as the monthly view is concerned and the long term view, as long as the Dow continues to hold above 69.1, expect the long-term picture to continue being sideways to up as long as we are holding above the RSI level of 69.1. Keep in mind, the market has spent the entire 2017 year by staying and holding above RSI 69.1. And don't forget, it can decide to stay above this level for years if it wants to. There's nothing forcing the market to come down. The market has the option, if it wants to continue building on this RSI level and continue doing it for many years. Ultimately, at some point, we expect a pullback, but until we see it move back below this threshold, we are looking at a market that is sideways to outright being bullish. Let's take a look at the S&P 500, and we can see that it is coming back to test this line here. Just below 50 was the movement of the November blast here. The market hasn't looked back since then. So this entry in price, this RSI breakout, was successful. So we take that information and draw our uniformity resistance or support line. In this case, it's support. Check the description of the video for a link describing this method, which I call the uniformity method. Since then, the market's been bouncing on this line. You can take a look at all these lows here. We got double bottom support, something like that. Uniform action support for the lows there. Uniform action support here for those lows. And now we are doing our best to hold this line. So if this line can hold on the daily for the S&P 500, chances are we are gonna see a recovery and potentially even a test of the recent highs, if not end up breaking out above the recent highs. So as long as we are seeing this hold, if it holds, that's a good sign for market bulls. And at the same time, if we end up failing to hold this line and we crack below that, that's going to be short-term sell signal, maybe even a major sell signal. We shall see. Take a look at the S&P 500. We can see here that there is a failed breakout on the weekly chart as of right now, which is not a good sign. And the level the market needed to break out above was 2439.07. So we closed below that with this shallow drop this past week of 0.61%. But that's a failed breakout. And again, failed breakouts, can be notorious for taking markets lower. We can see a good example here. There was a breakout attempt that was unsuccessful. And after that, we go into this slide here. So we have to see whether this means something. In fact, if you take a look at the 30-minute, we can see that short-term S&P 500 also needs to contend with topside resistance on this line. Coming into Friday's last couple of hours of trading, we came back to test that level. We were rejected. So we can assume that as long as this is rejection level on the short-term basis, chances are the market short-term continues to be sideways to down as long as we are seeing rejection on this line. If the market is to move higher, then the first line of business would be to take out this short-term resistance line. In fact, if you take a look at a 5-minute chart for the S&P 500, and I posted this on my social media account, you can see coming into the last trading hour, the market came back to test the top side of the 5-minute RSI level, and we were rejected twice, here and here, which might explain why we had that last minute couple minutes down into the close of the week here. So down couple of ticks to the downside on Friday because we came back to test the top side of the hourly chart and we were rejected. So again, we can see on a 5-minute window, even the market is still showing signs of being sideways to down until the market can come back and test that line and clear this resistance here on the 5-minute candle. Now, to conclude here for the S&P 500, let's not forget that the big picture continues to favor a bullish market. And that's just the conclusion for now, based on the fact that for the most part, 2017 has seen the S&P 500 hold its monthly RSI above 69.1. We all know that throughout this period, pullbacks have been shallow and very quick. And the market would recover and before you know it, be trading at new highs. So as long as the RSI is above 69.1, we have to assume that in the long-term picture continues to be sideways to up. How long can the market stay above 69.1? We don't know, but it can take months, weeks, even years. As this S&P 500 monthly chart shows, we stayed above 69.1 for a good 2 years throughout this bullish run for the SPX. So yes, short term the market has challenges, but long term we are still looking at a good market. If the market is to see lower prices, and I mean substantially lower prices, first thing bulls would have to concede is the bears would have to have enough strength to bring the market below this threshold on the monthly chart. Since we haven't seen that yet, we have to assume that the market continues to favor sideways action to outright bullish action. Now don't forget, we are going to be starting a new month, so sometimes the month-to-month energies can switch. So we need to be on the lookout for those types of things, especially if you're trading any type of stock or sector. Sometimes the monthly switch can change the energies, so watch those monthly charts. We shall see how things are going to play out. Otherwise, for now, subscribers, be on the lookout for part 2 of this weekend's market analysis video, where we shall go into some stock picks, take a look at sectors, take a look at commodities, and any kind of idea that I might come up with over the next couple of days. Otherwise, for the rest of you guys, enjoy the rest of your weekend. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings.